everyone, and welcome to episode 6 of Odds Are, your weekly S&P options forecast. I'm your host, Chris Torres. We've got some fun stuff for you guys today, but first let's jump right into last week's relative view. First thing you'll notice here is that we did not breach any of the breach points. For those of you who have been following along, you know what that means. That means that the chances that this coming week we will have a breach of the breach points jumps up significantly. We are up to actually 95.94, so almost 96% odds that the market will breach one of the two breach points for this week. You'll also notice that the market did in fact breach the Parabolic SAR level, which is part of the fun stuff that I was talking about that we'll cover here shortly. But it did breach that point, which puts us into an up position on the Parabolic SAR. And you'll also see that it stayed within the expected settlement range. So that was last week, but let's look at this week coming up. For this week, let's take a look at the moving averages. All moving averages are flashing green. Last week, the short-term moving average had come back up to the neutral rating, and now we're back up to bullish. So everything is flashing green across the board. Again, we did make mention that the market does have a tendency to bounce back up, especially in the short term. And if this is to be a longer downward movement, this could be a dead cat bounce, or it could just be a dip, which a lot of people obviously like to buy the dip. So we'll see how that plays out. But the fun thing that I wanted to get into today actually has to do with the Parabolic SAR. And to introduce that, we're going to go a little out of order, and we're actually going to start with the quote of the week. That's right. So this week, the quote is, either you drive disruption or you're outpaced by it. And this came, honestly, out of a magazine ad. I believe it was a car ad, and I actually came across it many, many years ago, and it was so profound, it spoke to me so much that I actually ripped the ad right out of the magazine, saved it, and framed it. If you don't believe me, here's a picture. Yes, I won't get into the whole Iron Man arc reactor thing right now, but needless to say, that is actually on my wall, and it speaks highly to what I believe in as far as constantly innovating, constantly refining your systems and staying ahead of the curve. Because if you just rely on historical data and you think history is always going to repeat itself in the same exact way, then you're going to get left behind. And with that, I'll actually bring up the fact that we've made modifications to our Parabolic SAR system. And what I will bring up on the screen here, there you go, we're going to see this is the new Parabolic SAR system. You will notice that we are already in an upward trend, which is not that different from what would have been the case if we would have stayed with the old one. But let's look at what's new. So first of all, we are no longer looking at the high or the low points of the week to be the breach of that level. So if the high breaches that point, that's not what's going to trigger the actual breach. It'll be based on where the market closes. So if the market closes above or below whatever Parabolic SAR level we have for that week, that will trigger that breach. The other thing that you'll notice here is that we refined the metrics, and so this new version of the system has some benefits here. You can see that the actual percentage of accuracy, which is how many times when the market breaches to the upside, that following week actually has a positive net change in the settlement price, and that actually went up from 64% up to 73% accuracy. Also, the average change of a week where it's following an upward breach went up from 0.4% to 0.5%, which over 20 years, that's actually a pretty significant jump. On the downward side, when the market breaches to the downside, we actually have an accuracy increase from 56% to 62%, meaning 62% of the time, the market will go down in the week following a breach to the downside. And we also have an average change that goes from 0.23 or just over 0.2% to the downside to 0.36. So, that's a big change as far as what the average downside potential or move is in a week where we've breached to the downside. So overall, we're constantly revisiting and analyzing our systems. I feel that this modification makes our system a lot more accurate, gives us a lot more opportunity, and so that's the system that we're using going forward. That being said, the numbers that we're going to introduce today for the Parabolic SAR are based on the new system, but you'll see they're not out of line with where we were anyway. So to go back to kind of where we were, let's go look now at the breach points, and we'll go through the normal progression of how we get to the Parabolic SAR. We'll look here at the breach points, and the breach points for this week are going to be the 38.56 level. There we go, 38.56, and the 39.59. So 95.94, or almost 96% chance that the market will breach one of these two levels. That's because last week we had no breach of the breach points. Let's look now at that Parabolic SAR. All right, you will see here that the Parabolic SAR is now at 37.93. Remember, we are now looking for the market to close below that level in order to trigger a breach to the downside. So 37.93, pretty far down there, which again is not out of line with the fact that we would have been in an upward Parabolic SAR configuration anyway, because the market did breach above that 39.50 level. But let's look now at the expected settlement range. Okay, you can see here the expected settlement range is between 37.91, only take 2 points below that 37.93 Parabolic SAR level, and up to 39.67, which is only 8 points higher than the upper breach point. So we have a 78.85% chance that it will stay within this expected settlement range, and we're now going to wrap it all up and put it into a relative view. All right, here we go. You can see where all those points are. That blue line in the middle, by the way, also representing where the market closed, which was at 3,900 this past week. All right, now let's go into, I didn't see that one coming. So for this week, we're actually going to be looking ahead. We're going to say, you cannot say you didn't see this coming, because we're telling you right now. We're telling you that the fact that there was no breach increases that probability, so we're definitely looking for a breach of one of those two breach points. And we're also taking into consideration where those breach points are in relation to other key metrics. So if you look at the wiggle room that you have, basically the space between the lower breach point and that settlement range, that's a pretty wide gap. You've got about a 65-point gap between the lower breach point and the expected settlement range, and pretty much the Parabolic SAR, which is right there with that lower range. That's a pretty big window, pretty big target for the market to hit. On the opposite side, if you look at the upper breach point and the upper settlement range, those are pretty close together. They're only 8 points apart. So, there's a lot more room for the market to still be within the expected ranges if it goes to the downside. I'll also remind you guys that last week we talked about the Bollinger Band and that range represented by the blue shaded area, and how I didn't think that the market had enough strength to go up above the 4,000 mark and stay above it. In fact, that is very much what happened. The market went up early in the week, and then it could not sustain that momentum, and then it dropped back down. So looking at this, we're going to keep in mind that the market is now in a upward, technically, Parabolic SAR position, but it definitely was rejected by that upper 4,000, that psychological barrier. So we'll see in this week if the market continues its downward trend. My personal take on it is that I do believe that we're going to have some more downward movement. I think we're going to get closer and closer to that Parabolic SAR that's already on an upward track, and we're going to be looking for it to eventually breach that. I don't think it's going to happen this week. I don't think we're going to breach that 37.93 level, but I do believe we are going to end up lower this week than when we started. That being said, I've already given you guys the quote of the week, so all I can tell you now is have fun, enjoy trading, enjoy learning, and I look forward to seeing you guys here next week. Take care.